Boom! What is up, Waves Capital? It's Royce Jacob. Welcome back to the channel. In this video, we're going to be talking about how the equity markets just suffered their worst day in over 2 years following some very alarming inflationary data that came from the August CPI report. And I don't only want to talk to you guys about why the contents of the report itself are so scary, but I also want to talk to you about why there are very little, if not any, arguments to be made for the bulls in this current market environment. Okay, on top of that, to give you guys as traders and investors something to leave this video with some value with, I do want to let you know how I plan on navigating this treacherous environment, this bloody market, because it's important to know, you guys, there are ways to make money in market environments like this. There's always a bull market somewhere, even in the case that that bull market is being short the market and buying put options, etc. So I'll talk to you guys about how us over at Waves Capital, we're actually able to come out of the worst day in over 2 years with a pretty significant profit. Okay, so that said, let's quickly go over each of the tabs I want to share with you guys today, and then we'll jump into each one individually, okay? We will be covering both fundamentals and technicals in this video with an absolute emphasis on the fundamentals because that's the macro, right? So let's close me out, get my fat head over in the bottom corner, just put me right there, and we'll kick it off with the macro newsletter that I wrote this morning. Put a lot of time into this because I did expect that I would be making a video for you guys covering my thoughts because this is such a significant event that occurred today. So we'll read over this again, kind of go into how I'm trading this, why we were able to make money today, but more importantly, why I think there's significantly more downside ahead for the equity markets following this CPI report. Okay, so speaking of the CPI report, I do want to touch on this single article with you guys, okay? And we won't dive deep into this. I just want to read some key points. The title is Inflation Isn't Just About Fuel Costs Anymore, as price increases broaden across the economy, okay? This is very important, and this is what makes it scary, okay? Is the unexpected, at least by many individuals, the unexpected and unforeseen aspects of the CPI report that led to inflation actually being higher than it was last month, even though many believed with lowering gas prices, with a lot of food costs lowering, that it would be cooler. That wasn't the case. It was still hotter, and it is scalding hot. Okay, so bad news for the markets, of course. Actually, bad news for the Fed, but what's bad news for the Fed is even worse news for the markets. So we'll expand on that in a little bit, okay? After we read over these key points, I want to dive into the charts and take a look at the S&P 500. The reason for this being the S&P 500, or the Spider ETF trust for the S&P 500, is pretty much the benchmark chart for the U.S. equity markets. If you want to sum up the entirety of the U.S. equity markets in a single chart, the best one to do that with is the SPY. Okay, so we'll be taking a look at the SPY. I want to talk to you guys about why, probably by the time you guys are watching this, there will be a major resolution, some very, very significant support potentially broken. And once this line of support is broken, I think the SPY will be entering somewhat of a free fall until we reach, I think you can guess it, okay? But again, we'll dive into the charts after we cover the fundamentals. And yeah, you guys, technically, fundamentally, the Bears are absolutely winning the match right now, okay? So that's that, you guys. At the end of the video, after we take a look at the SPY on the charts, I do want to talk to you, or just, I guess, reference the Trade Alert newsletter that I sent out this morning prior to even writing any of the macro newsletter. Of course, more time sensitive, especially on a day like today, to the Waves Capital members. So want to reference this, just kind of address the fact that it's okay to be wrong, but if you're wrong, you move fast, you fail fast, so you can move on and hopefully take back the win, take back the trophy as fast as you can once you accept that failure. And that's exactly what happened today, and today was a great example of that. So again, just want to close out the video talking to you about how you can make money, about how there's always ways to find a profit even in the bloodiest of markets. And just hopefully you guys gain some value from it. If you do gain some value, would appreciate a like, would appreciate you subscribing to the channel if you're not already. If not though, no worries at all. Let's get into this. Okay, so equities just experienced their worst day since June of 2020. And this decline can 100% be attributed to the August CPI, or Consumer Price Index report, that was released this morning. The data we received from this report is objectively bad news. At this point, it's extremely difficult to justify any sort of bull case for the markets. Inflation easing up was the light at the end of the tunnel, but unfortunately, I believe this tunnel has now caved in under the weight of macroeconomic factors. This report, I was very proud of this little graphic I made this morning. Just whipped it up, was inspired. So let me know if you guys like it. Maybe I'll make it a thumbnail or something. We'll see for a little bit. This report has been in the scopes of investors for weeks, with many, including myself, admittedly, believing that we'd see signs of inflation cooling over the month of August. But evidently, this was not the case. Inflation managed to increase by 0.1% last month, even as gas prices decreased. There are certain unforeseen factors, again, unforeseen by most. You got the oracles out there that are claimed to have seen this, but by the majority unforeseen, that contributed to overall inflation last month. These factors paint a much darker picture for the US economy due to the fact that inflation may be far more systemic than many believe it to be. So you know what, we'll just read over that right now, because again, we're just reading a few key points, and then we'll dive into why this is bad news for the Fed and how I think the Fed is going to approach attacking this. Okay, so the key points here. Rather than fuel, it was food, shelter, and medical services that drove costs higher in August, slapping a costly tax on those least able to afford it. So unfortunately, again, the lower class, the lower middle class is, the poor guys really getting affected. So especially time if you're in good fortune. I believe many of you who are investing who are in good fortune, it's an especially appropriate time to feel especially fortunate. Okay, the food at home index, a good proxy for grocery prices, has increased 13.5% over the past year, the largest rise since March of 1979. For medical care services, the monthly increase of 0.8% was the fastest monthly gain since October of 2019. Veterinary care was up 10% from a year ago. That's a weird one, but again, there's a lot of these underlying systemic factors that create for a very, very dangerous and very really almost unpreventable, in my opinion, the way I'm thinking about it. An environment in which, even in the case the Fed is going to raise rates as much as they possibly can and do everything in their power, use everything in their toolbox to fight inflation, to dampen consumer demand in the US economy. I still don't know if they'll be able to fight inflation just because there are so many systemic and so many unseen and probably still factors to come that remain unseen that will cause inflation to, it will take a very, very long time for inflation to cool because the problems are evidently more systemic than we once thought them to be. Okay, so the Federal Reserve is now expected to raise interest rates by a full percentage point, which is 100 basis points, at their next meeting next week, at their meetings next week on September 20th and 21st. So mark your calendars there. Probably going to get it even bloodier, okay, if we don't already price it in by then, which is very possible. If inflation showed signs of cooling in August, it's likely that they would have eased their tone regarding their plan of attack for destroying the U.S. economy. With this CPI data acting as a fresh slap in the face, the Fed is going to be coming out in full force, and there will be no possible relief on this front until the September CPI data is released a month from now. Okay, so this is the primary reason that the markets won't see relief. Okay, the reason we were somewhat bullish over the past month, and again, I will admit, and I'll address this at the very end of this video, that I did personally believe this August CPI data was going to come in at higher rates. There were a bunch of metrics, once again, above the surface. That's my bad. If we're only looking above the surface, that led many individuals to believe that inflation would cool down. And that's probably why we saw some relief in the leading up in the days prior to the CPI data being released. But again, slap in the face, except you're wrong. I was wrong. And again, you pivot as fast as you possibly can. And once again, that paid off. We'll cover that later. But this is bad news. There are very, very few bull arguments to be made for the markets right now. Again, Q2 earnings, not as bad as many analysts expected, but Q3 earnings coming in October are absolutely going to be bad, just given all of the economic metrics, all of the consumer spending metrics that we're seeing right now. Inflation is still high. The Federal Reserve is going to be on absolute offense. Once again, my belief here, and again, the belief of many, was that this August CPI data would show signs of somewhat meaningful inflation, leading investors to believe that the Federal Reserve could be a little less offensive and come out less offensive than they did at Jackson Hole a few weeks back, which initially really cratered the markets the first time following the relief rally, okay? Which now I will address is probably going to be a bear market bounce, okay? So again, you guys, very, very little arguments to be made for the markets right now. Very, very easy to be bearish. And yeah, it's very unlikely that we do see relief of any kind because there's just nothing going on. So all the arguments right now, all the potential catalysts lend themselves to the downside, and we won't see any potential relief until maybe investors start speculating that the September CPI data is going to be better, okay, which is at least 3 to 4 weeks from now, okay? At least that's how I'm thinking about it, and that's how I'm trading it as well, okay? As I've said in Trade Alerts, and this will segue us into the SPY, okay? As I said in the Trade Alerts newsletter, I've now gone into full bear mode. Thankfully, we pivoted when we did though. The options portfolio went from down 25% midday to up 25% by market close. Crazy day, you guys. Let me know in the comments down below if you guys are part of Waves Capital, if you caught these trades in time, and if you were able to really close out the day with a profit. Please let me know. Or if you're not part of Waves Cap, if you made some money, if you were loaded up with some puts, congrats to you. Let me know down below as well. Some of our newer put positions even gained over 150% in the final hours of the day. Today's actions within the portfolio provide the perfect example of why it's critical to move forward from losses as opposed to dwelling upon them. Winners accept defeat and move on as fast as possible, and losers feel sorry for themselves and stagnate. I know the majority of you are winners, but in the case that you weren't able to load up on more short positions earlier, don't worry, because it's extremely likely that the descent to new lows is only beginning. After today, we're incredibly well equipped for this scenario. So, again, you guys, before we move forward, please let me know in the comments down below what you think about the markets right now, how you're trading it. Are you hedged, or are you just not even hedged? Are you absolutely on offense with the shorts, with the put options? Let me know. And if you do want to know how I'm personally trading on a day-to-day basis, if you want to join Waves Capital for real, if you want these daily newsletters, the Trade Alert and the macro newsletter, the price targets that I do release on a near daily basis, the Trade Alert every single day, okay? Always letting you guys know how I'm trading on a daily basis. Again, those are the most time sensitive. If you want all of that, complete breakdown of my entire personal portfolio, it's the first link down in the description box below. That link will take you to this page. Just hit this guy, and that will take you to this page where you can then select whatever pricing plan you want, completely up to you. You can always unsubscribe, of course, but I trust you'll be sticking around, and honestly, I'm excited for what's to come, okay? So, again, first link down below. If not, though, no worries at all, and I expect you guys to engage in the comments down below because it's a pretty exciting time and there's a lot going on. So there's a lot of thinking to be done. I'm always curious to hear what you guys have to say. The S&P 500. Okay, so you know what? I'll just read this because it's all of my thoughts summed up, and then we can dive into the charts and kind of expand because I didn't explain what this trend line is right here, and I do think this will come into play. Okay, because the S&P 500 is the king of the U.S. equity markets, and we have put options on it as well, we'll close out the newsletters by taking a look at it on the charts. Again, the SPY just experienced its worst day in over 2 years since June of 2020, guys. That's crazy. And in doing so, is quickly approaching the line of short-term support, which is this lower yellow line right here. I expect this level of support to be broken over the following sessions. And once it is, I think the SPY will go into a free fall until we retest the prior all-time high from February of 2020. Mean reversion. Talk about this a lot here on the channel. In my mind, this would constitute an official reversion to the mean in terms of the macro cycle. It's entirely possible that we go lower than that, but as of now, 340 is my short-term, medium-term SPY target. I'll read this after we jump into the charts, okay? Yeah, just little words of encouragement. We'll close it out by talking trading and kind of I'll give you guys some specifics on how I'm hedging, okay? So, February 2020, all-time high, pre-COVID, right? And just think about it right now, you guys. Do you think the economy in February of 2020, pre-COVID, we had no idea what COVID was. None of us have ever lived through a pandemic. Good times, happy times, all happy campers. Ignorance was absolutely bliss. Do you think the economy was in a better place than it is today? Okay, February 2020, everything happening, the craziness has been the last couple of years, do you think the economy was in a better place? If you don't think so, then you're wrong, because it probably was, okay? So I'm sure all of you can agree with that, if not definitely most of you. But February 2020 economy definitely in a better place, consumers in a better position, and the macroeconomic forecast, like forward-looking consumer beliefs, were far, far stronger than they were now, okay? I feel like that has to be a truth. We have not yet reverted to the mean. Bitcoin, good example. Bitcoin, where we talk about mean reversion a lot, or the revisiting of the previous high of the prior rally or initial high of the current rally. Technically, that would take us to about 350, 360, kind of the first high. You can also count this as the first high, if I'm being honest, before any meaningful correction, because we are on a weekly candle. So first high for the SPY following that COVID bounce, the real black swan sell-off that we saw in the S&P, that would take us down to 323. So once again, I think it's entirely possible that the SPY falls lower. So as you're considering, if you want to make that same argument, January of 2018, so like 4.5 years ago, good times, right? Economy, great place. SPY still climbing, still ripping over the course of a few years. Just 2016, dude. We were at 220 in 2016. Okay, COVID lows. So is it possible that we revert further down than the all-time high that was reached in 2020 prior to the big sell-off? Absolutely. But I do think that at the very least, the SPY, once again, in the short term, very, very significant line of short-term support. Us over at Waves Capital have been eyeballing this line of support for a very long time. It's highly, highly likely that we do now break below this level of support. Once that's broken, we go into free fall. Obviously, maybe it takes a week, 2 weeks, 3 weeks. Maybe it takes a couple of months even to play this out. But ultimately, I think that before we do see any chance of making our way back to new all-time highs over the course, this is going to take years, you guys, because the economic climate is just so different, with the Fed doing the exact opposite of what they've been doing over the past couple of years. It's going to take a long time. We won't see all-time highs for a very long time. But I do think that we do need to see at least 340 in the SPY prior to even thinking about initiating the journey back to new all-time highs. Okay, so on top of that, this sign line right here, significant trend line for the S&P. You can see from 2018 all the way to like almost 2020, late 2019, acted as a significant ceiling, significant line of resistance. Once that was broken above, SPY ripped to a new all-time high in February of 2020, of course, before the sell-off. So I do think this could come into play if this trend line, previous line of resistance, comes into play as new support. That would intersect with February 2020 all-time high around late November. So again, maybe it takes a little longer to play out. Maybe there's a lot of ebbs and flows, which is a lot more likely than not. Honestly, it's probably not just going to fall off a cliff. But I do think it will happen sooner than later. The markets are more efficient than they've ever been. And this is a very, very bleak environment following the CPI report. Okay, so personally, my money's on the fact that this happens a lot sooner than later. I think the markets are just going to get it over with, rip off the Band-Aid, and revert to the mean so the macro cycle can continue to the upside, because that will likely happen eventually. Okay, so that's the video, you guys. Let's close it out by, we'll read through this just to address it, and then we'll talk about vixy, uvxy, put options, how I've hedged this, okay? So you all know that I was completely wrong about the results of today's report, but I'm not going to dwell on my wrong and sulk about it. If you fail, then fail fast and re-strategize in order to put yourself in the best position to win. This is exactly what I did today, at least in my opinion. The script has been flipped. I'm now, unfortunately, a macro bear, and I do believe that new lows are more likely than not following this dismal CPI report. So again, just reiterated that, but I do think new lows are on the horizon, okay? So that's that. Let's close it out. Can't read through this guy. Nope, read through this guy right here. So just a PSA to all of you. Things change fast, you guys. If you took a hit today, then it's perfectly fine. Just make sure that you get back up. I woke up this morning extremely bummed. Again, woke up portfolio down 25%, but I took action. I got to it. I didn't hesitate. I wasn't afraid. I didn't go sit in my corner and cry. I acted, okay? I said, okay, the CPI report, this is objectively bearish. This is not good news. As soon as I thought that, acted fast, okay? Acted fast, bumped up my shorts, sold most of my calls, bought a bunch of shorts, and over the course of the day, again, some of those positions well over 2x, some almost 3xing. And I'm genuinely excited for the days, weeks that we have in front of us. Waves Cap. Stay resilient, stay learning. Talk to you in the morning, in the case, of course, that you're subscribed. But if not, you guys, I appreciate you watching this. If you want to short the market, buy put options on the S&P 500, the SPY, buy put options on the NASDAQ 100 or the QQQ, and buy call options or just buy shares, common shares even, on vixy or uvxy. Okay, I'm not telling you to do this, but if you think the market is going to fall further, this is a pretty good way to potentially make some money in a bloody terrain. Okay, that's the video, you guys. Again, if you want to know how I'm trading on a day-to-day basis, videos slowing down a little bit, but I do focus on a little more, hopefully a little more quality in the videos. And but of course, on a day-to-day basis, I really prioritize and focus on the winning team that is Waves Capital. So once again, first link down below. I'll catch you in the comments downstairs as well. And I appreciate you watching. So until next time, always remember, take action, make waves. Peace.